What's up, everybody? Welcome to Perfect Order. And today, I think this video is gonna be super short for today, and I just wanna take you through my ideas for the week. And I only took one trade today, and it was on the S&P 500. Break down how I took the trade, and we will talk about the rest of the stuff that I'm looking at: gold, silver, and Nasdaq. But NFP is on Friday, so I'm really staying away from taking big trades or holding trades overnight because things might reverse because of NFP coming out on Friday. Just to be sure, is it on Friday? Yeah, on Friday, NFP is coming out. So all in all, we are still bullish. Let's just go to the 1 hour. All in all, we are still bullish. Everything on the 1 hour chart still indicates that we are likely to go higher unless some macro news come out that tanks these indices down. So for the most part, every day during New York, I'm going to be looking for small buys up until Friday if I can find any, but I'm not holding overnight. So yeah, but as you can see, everything is still the same as I explained yesterday. Seems like buyers are coming into the market. Cumulative delta is going up. There's more buying than selling. Prices above the moving average. Prices above the VWAP. Moving average is above VWAP. So everything seems to say bullish. So in a bullish market, what's the best time to go in? During a pullback. So unless there's a pullback happening, hopefully it's pretty soon, I can get in and hopefully hold for the rest of January. And either the S&P, the indices, Nasdaq, Nikkei. I'm still also bullish silver and gold, but I think today we are having a negative day. So yeah. So before I go through all my watch list, I took one trade today. I just want to break that down. And if I go to the 15-minute chart, I was looking at it from the 15-minute chart point of view. So I was waiting for New York. Most of my trades, I take them during New York. And I normally take them between 5 o'clock, 6, 8, which is, I think it's 10 o'clock New York time, 11, 1 o'clock. So during early mornings into lunch, that small period, that's where I normally take my trades during New York, because that's mostly from backtesting. That's where the majority of the big movement or the beginning of the continuation start. So the idea here was pretty simple. Bullish. So if everything is bullish, you're looking for a continuation during New York. So when New York came, I just waited for a pullback. So how do I determine which points I'm interested in? So like I said before, I have a midpoint, yesterday's midpoint. So this, without using any indicators, this is what lets me know that we are looking at a continuation or not. So remember what I said, I mark the high and low from yesterday, and I mark the midpoint. That means the 50% point of the high and low. When New York comes, if price is above the midpoint, that indicates to me that most probably there's high probability that there's gonna be a continuation. So we were above yesterday's midpoint, and we are also above last week. So the high and low of the previous week, we are currently trading above it. So chances are this is going to be a bullish week, unless there's gonna be a reversal sometime tomorrow, on Thursday, or on Friday during NFP. But for today, chances are we are gonna create a new high. That was my idea going into this. So when New Year came, we were trading above the previous week high. So we were above the previous week high, and we are below the previous day, which is yesterday's high. So, and from yesterday, we can see we were like, you could say this was a range. To say this is a range. So nothing fancy was happening. Like it was really pretty still movement. There wasn't anything fancy happening. It was just ranging. So I'm looking for a big movement, retrace back, and then buy the pullback. That's it. It was a simple trade because I'm already bullish. My bias is bullish, so I took the trade around half past 5, which is let me just change this to New York. Half past 5 South African time, which is half past 10 New York time. So I held a trade, took it out somewhere around here, but you can see it went higher. But now, as of recording this video, it's pulling back. Most probably might be giving an opportunity for you to buy and go higher, but I'm done for the day. So yeah, so the idea was still similar from yesterday, right? So the idea: up, retrace into the moving average. By the retracement, you get the continuation, which should happen during New York. So now, if a continuation does not happen during New York, that's an indication that we might be reversing, because most of the time, continuations happen during New York. So if you backtest, you'll see that continuations happen during New York. So you can see yesterday's low here. When New York comes, it breaks that low, making a new low. So you go, if you are trending higher or lower, you go into the trading day expecting New York to break yesterday's low or yesterday's high. If that does not happen, chances are it might happen tomorrow, or we are retracing higher. Pretty simple. That's why I always say I like to just keep things simple. Don't overcomplicate your trading, because if you complicate it, there should not be a lot of steps in your methodology. It should be, keep it clean and simple. Have things that give you a bias, so that you don't stay there thinking whether it's gonna go up or not, and also leave room for error, because sometimes you might go in early, it takes you out, it doesn't mean you were wrong, you can try again. So that's why I always have like zones where I can try to buy. So like here, if it did not work out here, I could have tried lower around this high. So I have like a three stage fail. So if it fails one point, I'll try again lower. If it fails that, I'll try again lower, and then I might say I'm done for the day. It's not going my direction. Cool. So now I like to go to the 1 hour chart. So what I'm thinking right now, I think we are overextended. So I'm talking about going into the future now. We are overextended, and I think we are at all-time highs. We passed the all-time highs slightly. So I'm not sure if whether we're gonna have a continuation or a pullback before we make other all-time highs. So, but things as they stand now, things are looking good for continuations. We are going higher because all my indicators here, my checklist, are saying bullish. Right? So it's a similar thing with the Nasdaq. Everything is indicating bullish on the 1 hour. Um, if I go to this, if I go to the 4 hour chart, everything is bullish except this last one, which is this is a minor check, but everything seems to be still bullish. So if higher time frame bias agrees with the lower time bias, you go in that trend. You don't counter trade. So if everything is bullish, if you're day trading, when the day comes, New York comes, you are looking for continuations. Don't stress yourself trying to look for other having complicated steps that might introduce some level of doubt in your trading. Right. So yeah, on Nasdaq it's a similar thing. We are going higher. We broke all-time highs. We'll see tomorrow whether we're gonna have a pullback and a continuation into higher prices. Similarly with the Nikkei is not doing anything right now. It seems to be like ranging. So what the Nikkei likes to do, it likes to range and then go higher. It ranges, then go higher. It likes doing that. It ranges and then it chooses a direction. It ranges and then it chooses a direction. It ranges for a little bit and then it chooses direction. It doesn't move like the S&P, where sometimes you can have days on days just it's going higher and higher. The Nikkei likes to pause a little bit and then continue. So you have to be like super ready for when it does that. At least it gives you a chance for you to think about it and then go in. That's why I like trading it. So right now it's just ranging for today. Nothing is happening, but everything indicates that we are going higher. So if everything stays the same, I'll be looking for buys. Most probably next week. So with gold, so when it comes to gold and silver, I'm favoring gold more for this year because I think silver outperformed gold last year, and I think even the year before, 2023. So silver is a bit more expensive than gold. So I'm thinking that this year investors might wanna put some money in gold, pushing it higher for this year. So I'll be mostly looking at silver because I don't think silver is just gonna keep going higher. Because when you look at silver, it's just pushing higher. It's not stopping. So I think for this year we might have a similar thing for gold, but it's just my thinking. I'm not sure whether it will happen. It might not even happen. Silver might just keep ripping higher and higher. But for silver, for today, I wanted to take a trade today because price came to the midpoint, previous week midpoint, and I wanted to take a buy here and thought about it, and I was like, no, maybe I should wait until Friday for NFP. And because everything here is indicating bullish, we are still above the moving average on the cumulative delta. As long as it does not go below over an extended period of time, I'm still favoring buys for silver and also for gold. Yeah, so that's pretty much it. I don't want to just go into detail about explaining technical stuff. I just wanna flesh out my ideas, and then if anybody's watching, they can just tell me their opinions on the comment section. Remember that this is not financial advice. This is mainly for educational purposes only. So yeah, that's me for today, and I'll check you guys on the next video. Cheers.